Thanks for joining us. It's Wednesday, and I'm Marlon Bowling with you, your tour guide to the ag commodities. We're joined by Rich Nelson of Allendale Incorporated in McHenry, Illinois, as we get set for our daytime session today. All right, Rich, I was looking at the overnight trade here, and it looks like the corn and soybeans were weaker in the Globex market. So it looks like this feed grain market is having a little bit of trouble as we get toward these major USDA reports later on this week. And of course, you have to keep in mind it's the end of the trading month and the quarter here this week. So why is that weighing so much on the market today?
You know, I think we're going to see some confirmation of some generally weaker than needed demand as far as the corn, soybeans, and wheat in this last quarter. So that will be reflected on the grain stocks numbers. And for the plantings, as mentioned yesterday, we do have a little concern that this will be a survey as of March 1, which is based on intentions, not quite a realistic weather-based estimate there. So I think those two things. And last thing, we do have this small peak in temperatures for this week going on here today. And as we all know, temperatures will be falling in the coming days, in addition to getting excess moisture here.
So we have the corn down 2 or 3 cents, soybeans down roughly about 4.25 cents on the wheat trade. Let's take a look at what wheat is doing overnight. And yesterday, for most of the day, Chicago wheat led the pack. It was higher by about 4 cents, and then it failed heading into the close, while Kansas City and Minneapolis were lower all day long. It looks like Kansas City wheat rebounded a couple of pennies overnight in the May contract. 4.45 was their last trade. And let's take a look at that Minneapolis wheat, see what it was doing overnight. Looks like it was a little bit weaker again, a penny and a quarter lower at 5.66. Interesting side note on the wheat here, Rich. John Jenkinson, our colleague, was talking about he had received a notice from the Dodge City Weather Office, and it was pointing out that there is a risk of temperatures getting down into the lower 20s in southwest Kansas by, I believe, this weekend or later this week. And there is quite a bit of wheat starting to join in Kansas. Even a week ago, it was already 25%. Trade doesn't seem to be paying any attention to that here.
You know, not just yet, but that is an important thing to consider because winter wheat yields are primarily determined in the month of April. So this is a very big issue for us directly ahead, and any crop stress certainly would give us a lot to discuss. We'll see what type of impact that does have on yields, though, here.
With that in mind and the upcoming reports, how are the funds positioned right now? Are they still hanging on to those historically short positions or not?
You know, for the most part, they are. We did see, of course, in the recent rally, a little bit of that pressure being taken off. But one thing to know about this wheat issue is one thing we talked yesterday about the corn was some heavy sales without much of a price response. On the wheat side, we have seen in previous weeks about a 30,000 contract sale here. And in that phase, we actually did see a good drop in wheat prices. So far, the market's still kind of a weak trade here for the wheat overall.
Okay, well, what we'll do is we'll take a short break here, Rich, and then we'll come back and we'll take a look at what to expect in the livestock trade. It's already been kind of a wild week there, and we'll take a look at that when we come back right after these messages. Thank you, ma'am. Let's go back to Rich Nelson of Allendale Incorporated in McHenry, Illinois. And as we turn now to our livestock trade and our discussion there, let's take a look at what to expect in the market action today. We had the big drop in the cattle market on Monday, Rich. Things looked like they were going to stabilize early yesterday in the cattle market, but then it kind of went sliding away again. The hog trade has had kind of a tough go this week. It's just been all over the board here. Now, we do have a big quarterly hogs and pigs report coming out tomorrow. Now, that'll be after the markets close up for the day. How much of a factor do you think that's going to have on today's trade?
For today, I think it will be an issue here. Obviously, we're waiting on both export sales tomorrow morning and this big quarterly hogs and pigs report tomorrow afternoon. On this hogs and pigs, average guess for right now among analysts on the Bloomberg Newswire survey is a 2.1% year-over-year increase. So, in other words, expansion still continues. Big question for us in the industry, though, is this was a survey taken as of March 1. Before a 24% rally on the June contract, and a 26% rally on the June contract, and a 24% rally on the December. So are these numbers still valid is a good question.
So what do they expect in the other numbers then?
As far as the breeding herd, still in general expansion, 1.8% over last year, maybe a little reduced from previous quarters. On the kept for marketing, so the hogs that will be processed over the next 6 months, those numbers also up 2.1%. So in general, expansion still continues right now.
Okay, on the cattle side, it looks like everything was pretty quiet. Maybe just a few heads sold in Iowa yesterday. What's going to be moving this market now that we're getting toward the end of this big cycle with the month and the quarter wrapping up this week here?
We do have some discussion about weather, and that has to be a real clear point right now. You mentioned Dodge City, Kansas in the previous segment here, and as far as temperatures, they're going to be up to 77 degrees here today. So what has been a warming spell will add a little pressure to this market here on the weather side. Also on the supply end of things, we will see numbers pop up in terms of offered fat cattle in the next few weeks up ahead here too.
Okay, now when you look at the overall demand picture here, how much is that weighing into the equation here, given the fact that, well, the economy and the dollar value hasn't seemed to change a whole lot here recently?
And that's a great point. We are still, in general, seeing the U.S. consumer accepting this meat without really any major price pushback. And on top of that, we also have to wonder if there's some psychological impact from these really high hog prices. Or does that mean that we also have some type of small, above-needed premium for the cattle price and as well here? What
happened to the story about Russian demand for the pork?
And that's a good question here for right now. I think for right now they're going to be looking at the EU as their primary market here if they are going to be allowing imports. So that'll be our main question as far as Russia goes here.
Now, we do get our weekly export sales numbers tomorrow. And, of course, what was it, a couple of weeks ago, we had the big purchase from China. Last week they were in there as a buyer on the pork side, but they only bought about 3,000 tons. Any expectations as what we might see this week?
And we're really hoping. I guess that's the best thing we'll point out. We went from a pretty large purchase, like you mentioned, 2 weeks ago. Last week's were relatively minor at about 3,300 metric tons. So that's a little bit of a disappointment. We would expect the market to be looking for something more substantial for tomorrow's number, probably on that 5,000 to 10,000 range.
All right, I wanted to take a quick look at the beef cutout values from yesterday afternoon, according to USDA, and get you updated there on the choice cuts yesterday. We had the market coming up about 51 cents in value. It was priced at $229.51, and the select cuts were up 26 cents yesterday at $218.99. The pork carcass cutout values were up 87 cents. Bellies were up $3.20 yesterday afternoon. Thanks, Rich, for talking with us. Rich Nelson of Allendale in McHenry, Illinois.